A lot going on right now in DC. Well, maybe more in the press and less action in DC, but a lot of talk. And then, we're looking at $3.5 trillion for a new spending program through the budget reconciliation on top of the 500 and change on the infrastructure program. And there's been a lot of back and forth with the moderates in the House and the moderates in the Democrats in the Senate, and who's on board and who's not. And then Joe Manchin came out with a op-ed last Friday that kind of sent a message to the markets where he asked for Congress to take a strategic pause. And I think this is a really interesting time. So if you can move to the next slide, Vanessa. Thank you. So the three things I want to cover is, do we need to spend an additional $3.5 trillion, which is the question Manchin raised. I want to talk about common prosperity, not just from a Chinese perspective and what that might mean for us, and then talk about our base case for where we go from here. So if we jump to the next slide. So if you're a progressive, your view would be, say it ain't so, Joe. As he came out with all the challenges that the nation's facing and his concern about additional crises in the future, and the belief that obviously he's not a buyer in the MMT view that you can spend indefinitely and not worry about the consequences, and growth will come by taking care of everyone. So he's not in that camp. And this actually puts a real crimp in the program for the Democrats right now, because a lot of what was approved by the House was to set a date for the infrastructure bill that was tied in, but they had to agree to move forward with the reconciliation. And the House moderates really caved. Manchin does not look like he's going to cave, nor will the woman senator from Arizona, Kirsten Sinema. So this creates a challenge for the administration, but it also creates a challenge for the Democratic Party, because the Republicans can sit back and let the Democrats play this out as they're trying to get their program put through. But I think this puts a real crimp in what the opportunity is here. So if we go to the next slide, his primary concerns are around where inflation is. And his view is if it does take off and it is overheating and not transitory, then you're going to be penalizing the middle class and working Americans, which is what the Democratic Party is trying to help, not the wealthy. He's concerned about the debt levels at 28 trillion and growing. And he's also concerned about whether we're going to have more crises, whether it's financial, pandemic, or otherwise, or military. So why a strategic pause? His three areas are to figure out what the path of the pandemic is. And are we going to be in lockdowns over the winter, or are we, as Grossman was focusing on, are we really at a peak and things are going to get better? The transitory or not is still an issue. And then his view of traditionally budget decisions under artificial time frames from political reasons don't lead to good decisions. So what does this all mean for the Democratic agenda, and what does it mean for inflation? Because I think they're all tied together. I don't think he's going to roll over like the House Democrats did. I think he's going to really get people to focus on where they're going. And after he wrote that op-ed, he spoke to a group in West Virginia. And the question was, is this grandstanding, or is he really looking for a pause and figure out where these issues go? And his comment, there was a quote from that event last Thursday for the Chamber of Commerce, was, let's sit back and see what happens. That's not a political, these issues you can't figure out whether inflation's transitory in the time frame that the House was setting up. So I think this has some real challenges. I think everyone has an agenda in DC, so I suspect that he does too, but it could be not a nefarious one. It could be he's really concerned about debt, inflation, and future crises, and thinks that we're being not prudent in spending for the program right now. So I think this is a really important issue to see how this resolves for where we're going, because it's coming at a time that we have to work on the debt ceiling, which it looks like will run out of money for the Treasury sometime around mid-October. So we don't have a big window here to get some resolution on these issues. So if you can move to the next slide, Inessa, please. So let's look at some of the numbers here. So this is the GDP rate on a quarterly basis, and it's the change from the preceding period, going back to the beginning of 19 and projected out through, and it's through the second quarter. You just saw Goldman bring down their numbers for US GDP for the third quarter. That's the second revision that they've made. So we're not clearly out of the woods yet. And Inessa, if you go to the next slide. It gets back to the deficit, and I've showed this chart before, but this is before you add in the $3.5 trillion of what this could be if we got to that number. So projecting out to 2031, you're going to have 5% of GDP deficits, with interest costs being about a half, and that means we're going to have to see where this goes from here. But if we move back, and when I show you some future slides where the projections are for inflation and interest rates, you're going to see there's a big variance of views of where this could go. So if we can go to the next slide, Inessa. And here's just a quick chart of the debt, and you can see we're at 1946 levels and projected to rise. So this is not a good picture for the US. And one of the implications for this, with all the other things going on around the world, is what's the dollar's role as the reserve currency, because so much of commodity prices are priced off that, but it also allows the US to hold the high federal debt levels that we have because of the strength of the dollar and our ability to print. If we lose that, it puts us in a bad spot and really has big implications for the global economy. So Inessa, if you can go to the next slide, please. And here's the projections for interest rates out to 2031 and inflation on the top bar. And on the bottom, it shows the projections for the 10-year Treasury and the 3-month Treasury. And you can see they're moving up. And one of the concerns is what happens to the deficits if we get these kind of interest rate moves with our debt rising before you add another couple $1 trillion to it. So real concerns here. And I think that's going to push many of in the Democratic side to focus on the deficits and also what that means. So that means to me that we may likely have a pared back spending program through the reconciliation. If you go to the next slide, Inessa. And what's interesting here is this is that chart with GDP and also inflation of consumer prices using historical forecasts based on previous forecasts to figure out the probabilities of the range of outcomes. So on the top, you can see the range of outcomes out to 2025 would be -1% to positive 3.5% on GDP growth. The 3.5 would be great. The -1% would not be so good. And then if you look at the range for inflation out in 2025, it's from 0.3% to 4.5%. So this kind of exact precision for the government is part of the challenge of figuring out how much we can afford to spend as we go forward. So I think the variance here and the range of probabilities is actually something that the market's not really focused on, and we maybe want to focus on a little bit more. So Inessa, if you go to the next slide, please. So talk about common prosperity, which is a big theme for China, but the goal for President Xi and for the Chinese party is placing a focus on labor, income inequality, education, childcare, healthcare, elderly care, and affordable housing, which happens to be very similar to a lot of the soft infrastructure initiatives that the US is trying to put through. Hard to argue that any of these things would be in and of themselves negatives for the country to focus on or for any country to focus on. And I think if you went to the UK or to Europe or to South America, these issues would be the same issues. The question is, how fast can you get there and how do you achieve all these goals at once when you're working from places where you're coming out of a financial crisis 14 years ago and a pandemic right now, And it's safe to say that we're on a pretty fragile footing for the global economy. So if you go to the next slide, Anessa. So how do we answer the question? Well, it's interesting that the White House is pretty confident that Senator Manchin's concerns can be addressed. They came out yesterday with a statement on it, and again today. Many in Congress, particularly those in contested districts, want to see the spending paid for, which is going to be a challenge because you can't get the growth that they're looking for if you likely increase the taxes to the levels that they're going to do. It's going to slow down capital flows and capital formation. So that's a challenge to hit the number. Reconciliation is always difficult to do. So to pass in whatever's passed in final form will be very different than the current proposals. And it's pretty clear that a lot of people in the know in DC would say that the best estimate will be between half and 2/3 of what's being proposed right now. And there really is no reason for the Republicans to be proactive in this because the fight right now is between the moderates and the progressives and the Democratic Party before they have to step in and do anything. And there are a lot of contested districts right now, and people are on pretty fragile footing. And if you try and use the pandemic as a selling tool, I think you're starting to see that in Canada right now, where Trudeau called for a flash election, and there's a lot of blowback on him right now. I think you'll see people who are trying to use the pandemic for political gains not getting much benefit from that. So I think we're going to see some real challenges here of getting as big a number, but there'll be more spending, and a lot of it is necessary, but the question is degree and how effective the spend goes. So we'll see how that plays out. And then Inessa, if you can go to the next slide. So our take is we continue to focus on the things that where capital has to flow. We think that the 6 transformations we talked about are real. The monetary and fiscal is underway. That still has to show what final forms it's going to take. The political and geopolitical one is really a big driver for a lot of what we're seeing, as well as the social and societal. And what the Democrats are proposing with the $3.5 trillion and what she's proposing for with the changes he's making in China are really changing the role of government in society. And whenever you go through those periods, a lot of things have to go along with that for it to work, or you're throwing money at something that then you revert back to when it fails. So if it fails. So I think there's a lot going on with these transformations that are going to be critical to investment strategy going forward. The world is still swimming in liquidity, though, and even if we start tapering here, and they're starting to talk about tapering in other nations, and even with that, the amount of money that's been thrown at the problem globally is massive, and it takes 12 to 18 or 24 months for liquidity stimulus to be worked through the system. So even if we start to taper, it'll be a while before the government support goes away, if it does at all. We think the Fed will begin to begin their tapering process. Not sure exactly when they start. A lot of it will depend on the debt ceiling and what other things are being proposed, because if we're throwing another $3.5 trillion at it, we probably don't need as much money thrown at it from the Fed. But they're not going to raise rates meaningfully anytime soon. And if you go back to the charts where we talk about where debt is going to be, and you have a move up in interest rates like they're projecting for the 3-month and the 10-year, we're probably going to be seeing another 2 or 3% added onto the interest cost on, $23 billion, $30 trillion. So you're looking at significant increase in the deficits, which you can't get there if you just do it through taxes and capital and things that hinder capital formation. What's a positive right now, because I've given you some negatives, is corporations, consumers, and governments are spending like crazy to improve productivity. And you're going to start to see the benefits of that very quickly. And you're starting to see it in some of the numbers already. We think there's still a positive outlook for corporate earnings and profits, but it's not going to be equally shared. And it's going to be interesting to see how the M&A activity plays in this area, because it's going to allow companies to trim weak performing businesses and supplement their stronger performers. And that's where the need to be highly selective comes in our view. We think equity investing, private, public venture still remains the best game in town. But China is going to be much more difficult to invest in at this time, as we were talking about before. I don't think the private markets will be spared there. I think the government's going to have their hand in anything that has big data or anything that has big implications for the government control of the population, and also for things that go against the educational goals and other goals of the leadership there. We're still in the inflation will be muted and productivity increases will be significant, but inflation is going to be known later on, not right now. So whether we think it's muted or transitory or more permanent, I think you'll have shades of both. But overall, if the productivity increases come, we think that you'll see some significant reduction in inflation pressures, as well as just the easing of the supply constraints due to the excess demand from all the change that's gone on with the pandemic. We think that'll create easing conditions there. And then lastly, it's important to keep in mind, if you look at what the Congressional Budget Office is projecting, we're looking at massive cumulative GDP growth for the next decade from the US. And I'm not sure with what's going on with China right now that their economy will stay on it's not going to stay on the same growth path that it had been. And I wonder, is this going to create a challenge for them overtaking the US on the time frame that people were previously projecting? So still a positive environment for markets. I will add that I saw an interesting technical note out on the 10-year Treasury. When it peaked at 177 earlier this year, dropped down into the 120s. It looks like the 50-day moving average is around 145. So the move up today of 4 or 5 basis points to 137 and getting to the mid-range of the 50-day moving average would not be a surprise. So I think seeing a slight move up in rates should not be alarming to anyone. It is probably the sign of a pretty good economy. So that's our take on what's going on, Mark. I think there's a lot coming down the pike, and whether Manchin's doing this from just to appeal to his base, or whether this is what he believes in or not, the margins are so thin to get things approved, particularly in contested districts, that you have to really listen to the guys who are the holdouts, because this is even before the Republicans really go to work on trying to undermine what's going on. And when you have the debt ceiling being raised right now, or need to be raised right now, that takes another distraction for the Democratic agenda, and how much of that can get put through in this period is going to be require a lot of negotiation. So be interesting couple months. I would expect some volatility, but I think it's all about earnings, and the companies that can show the earnings growth will continue to do quite well, and the others will struggle. So it's a very selective time for a selective market. So with that, I'll stop, Mark, and open it up to the group.
Sounds like we should make a further detour down to West Virginia, meet with Mr. Manchin.
Yeah, he would be. It'd be fascinating to hear what he has to say. And I think there's always a lot of stuff going on behind the scenes, but this is setting up for a problem inside the Democratic Party if the leadership is not strong. And I don't think what you saw with Pelosi running over the moderates in the House will happen with the Senate as easily. So they'll have to give to get what they want. So, but I do think the range is going to be the really important thing. The range of outcomes, even for 5 years, is going to be something to keep an eye on, because we don't have that much room for margin of error on what our projections are on the deficits, and still maintain the dollar's reserve currency.
Who's behind those ranges?
That's the Congressional Budget Office. So they're actually working for both parties, allegedly.
Questions, comments?
At the risk of sounding optimistic, it's sort of interesting that you've laid out the similarities of the objectives that the Chinese government's got for their population. They're dealing with all the same issues we're dealing with. And wouldn't it be interesting if the two biggest economic powers in the world actually pursued policies that address that stuff? I guess that's the first thing. And then the second thing is, what Manchin's doing is he's forcing the legislative body into compromise, which is what they're supposed to do anyway.
Yep.
to me, that would be great. I mean, in a crazy way, there's like, you could almost paint an optimistic picture here if you think if it didn't end up in total stalemate. The one thing is the Chinese don't get stalemate because of the way they're set up, but maybe they're providing a pathway to us, and maybe we end up with some sort of compromise in here. And I'm just throwing that out there. I mean, I rarely come out with any positive commentary about any of these governmental bodies, but yeah.
I think you're right, Duncan. I think the similarities are fascinating if you strip out what the common prosperity goals of China are and what a lot of the proposals for the soft infrastructure plan are. They're identical. The question is, how do you get there and how do you pay for it? And how fast can you achieve all the goals you want to achieve? The difference between the US and China has always been, one of the main differences is the time horizon to achieve your goals. We want instant gratification here. And that's what, the $3.5 trillion proposal is, to try and cover all the ills of the last however long we've neglected some of these areas, where China is looking at doing this over the long term. So I think that is an important difference. Keep in mind. But it'll be interesting to see how Washington, D.C. actually works through this, because this is going to be fights on top of fights to get stuff done.
So what's the deadline on it? You said there's something in October. What forces them to come to some sort of...
Well, the debt ceiling is one of the first issues that you have to deal with, because you have to get the debt ceiling raised to keep the government funded. And I think they're taking extreme measures. So you can never really tell when it runs out, but they project based on the extreme measures. I think it's between mid-October and mid-November, which may put them past the deadline that the House set to have the infrastructure bill and the reconciliation bills done in tandem. So it sets up for a pretty interesting couple months. And I think we'll have some implications for the market as well in terms of volatility.
Can I ask another question? You've mentioned this word, and then I think it was 2 weeks ago, Mohammed I never say his last name properly, El-Erian,
yep,
was on CNBC proclaiming that China was uninvestable. And it reminded me when I was at Merrill Lynch, hating to date myself, in 2000, when Merrill Lynch declared emerging markets not an asset class. It has that similar sort of bold statement of fact that, and is really more a sort of a market bottom sentiment. If I just sort of throw that out there at you. I mean, you're sort of indicating that same word in uninvestable. I mean, is that uninvestable over 2 or 3 months? I mean, for crying out loud, it's the fastest growing country in the world, and these are the behemoth companies. Are they going to go bust? Where are we going to end up with it?
Well, they might not go bust, but they might not be serving the shareholders as much as other areas are. And the goal of the party is to serve the party first. So it's not the same. Soros came out with a similar statement we were talking about earlier, Duncan, where I think he has an op-ed in one of the China Daily or one of the papers, and it's on his own GeorgeSoros.com, where he was calling China uninvestable now as well. It'd be interesting to hear what Jim Chanos would say right now, because he thought it was uninvestable back for quite some time too. But it was a tough short as well. So I think we're in one of those modes where you have to step back and see where it plays out. It's not that you can't make money there, but you're going to have to be really careful about how you're doing it. And from an investment perspective versus a trading perspective, I think investing there is more difficult right now. And one of the strategists I was following was really commenting, because this came up on a call a couple of weeks ago, and I think, Bill, you raised the question, was that same for public equities versus venture and private? And I think Todd was of the view that private and venture were okay. I think the latest stuff that they're coming out with, they're looking to dip their toes into the private markets as well, because anything that goes against the party's program will be subject to review, say, or review and control, however they decide to go. So I think whether it's uninvestable for the long term, I doubt it, but there are times where you need to step back and risk mitigate. And I think this is what Elarian was talking about. I think it's what Soros is talking about right now. Soros is a trader by background, so the first chance he gets, he'll find an opportunity to make money, he'll make it.
Have you heard anything from Dalio lately on this?
I think there was something out yesterday from Rebecca Patterson at Bridgewater that I didn't get through. So I'll have to check on that one. I think it's going to be interesting what BlackRock comes back with, because Soros called them out in his piece for, how does that fit ESG if you're supporting a country that is doing a lot of things that aren't ESG appropriate, which is a whole nother topic we should circle back to, Mark, is how you manage ESG in your own portfolios, and how do you know what ESG, who's following the standards and all that. A lot more coming on that we could spend hours on.
Well, we're going to do that part of the Midwest tour. It's going to be a theme. But on this China's angle, Bill, if anybody from Morgan Creek, actually back, and this must have been a Freudian slip on purpose. So I played soccer and tennis with a guy who runs treasury at Morgan Stanley, and he was talking about reverse repo. If I had a beer for every time he said reverse repo, I told him, can you come and talk to us? So he said, sure. Just not drinking 4 beers, but he said that he'll.
Yeah, no, I think that'd be really interesting to have someone a little closer to that market, come and talk about it, because it does, kind of, Stephen, to emphasize your point. The debt ceiling conversation, is really important, because the Treasury needs to get back and continue to issue more securities because of the shortage of collateral and all that. You can kind of watch this on the chart of the U.S. Treasury current account. Their balance on that has gone from like over $1 trillion. I think it's now probably approaching 400 million, which is what they were targeting. And I think that's their run rate of spending, kind of divided by 400 million is, or other way around, is giving you the number of days left before they get into real problems. So yeah, so the debt ceiling conversation is actually quite important, to do that.
Yep. Yeah, that could put a squeeze on things and could lead to some short-term upward pressure in rates until they get whatever the resolution for that is. So you could see some push up in short-term rates.
Mm-hmm.
Well, we've never used the word COVID in an entire conversation, or maybe I missed it.
Pandemic, but we didn't say the word COVID.
But what are we saying there? Is it just, are we still going to, like, we're in a turning of the corner, inch by inch, we get more vaccinations up, or what's the consensus there?
Go ahead, Bill. I could see that hot potato coming. Yeah, this Delta virus or Delta variant, has proven to be a lot more thorny of a situation than I think anybody ever perceived. The models kind of have been pushing our peak out. It's really interesting if you look at us, as in the U.S. versus other countries, where we're kind of a standout in the sense that we're the only ones who seem to be having a significant issue with it at this point. All other countries have their issues, but it's pretty significant here. And vaccinations are continuing on an upward slope, but not at a high rate, although it has picked up a little bit. I think, we've got two issues. One, back to school, which, now I think most schools in the country are either going to be back in session this week or next week, or already are. So that's one sort of gathering issue. See what happens after Labor Day in terms of, people getting together. So I think that the next 6 weeks, as far as watching, the progression of the variant, will be very important in terms of telling us how close we are to the peak or not. The other thing that was raised in a conversation I had separately late last week was that there's yet another variant out there that is, I'm not using the technical words, but of concern out there. And it's the MU variant. It's like less than 2% of what we have here in the US right now. And again, kind of going back to Glenn's comments that the Delta variant is so contagious that it simply outcompetes every other variant that's out there. So, and some of them, are kind of nastier than Delta. So in some respects, it's good that the Delta has crowded out the other ones. But as far as where we are on the curve, this has been somewhat at variance to the forecast, which again, the IHME model has been very, very good as far as its forecastability. And I believe this is the first time that they've had to extend out, their forecasts before. So,
Bill, is that because the vaccination rates are slowing?
it could be. I'll tell you, a lot of the information that was readily available in prior months is like not out there now. So I used to be able to find demographic information pretty quickly. It's very difficult to find now. So, so it's really demographics, like which cohorts. Again, if you look at the 6 o'clock news, you're thinking that every child, under the age of 18 is going to get it and they're going to go in the hospital and die. Obviously that's not the case, but nonetheless, trying to get a handle on exactly which demographics, are getting hit like for real, is tough. The other thing that is also difficult to get really hard. There is some information out, but not tons of it in terms of infections by who's vaccinated versus who's not. I think the anecdotal, thank you. I for some reason I was having trouble, getting that. So, yeah, so you can see, so this is actually pretty interesting. If you look at the purple line, which is their base case, that has, it hasn't, there's no peak in there. It's just leveling off a little bit. Now that's decidedly different from what we've seen the last 2 months. And then also you can see, the worst case is kind of taking off probably at a faster rate than what we've seen in the last couple of months. So, because if you went back like a month to 2 months ago, where we are right now, would have been, on the other side of the peak, but clearly, the IHME data is not showing that at the moment.
And the vaccine looks like it's predicted to level off around 60%.
Yeah. I think we're kind of getting to the point where
and then we have the boosters coming. That's, when is that? We all qualify for that in 6 months later?
Yeah, I mean, you have to kind of monitor the conversation around that one, because at first everybody thought like, oh yeah, okay, great. If you've had the shot, 6 months later, you can qualify for that.
8 months.
Yeah, thank you, Lauren. 8 months.
I thought they were.
However, if you listen to some of the recent conversation around it, it's becoming fuzzy rather quickly. So we'll see what actually happens.
Yeah, I'll jump in here with a comment from my internist on this question, and he said it's actually really important to get the antibody levels evaluated prior to having the booster, because there's a wide range of different experience that individuals are having in terms of the quantities of antibodies developed.
Yeah. one other aspect of this whole thing, if you look at it even a little more broadly, and thinking about, potential worst case situations where, because of Delta and others, this situation persists, certainly, into next year. It's hard to get concise information about treatments. And I've actually been spending a reasonable amount of time for a while now trying to find more information of that. I would love to try to find a couple of people who can come and talk to us, because, ivermectin and hydroxychloroquine have been dramatically politicized, since Trump uttered the word hydroxychloroquine. But at the same time, there are studies that are out there that are indicating that those are good treatments. So if you buy a worst case scenario where literally, not hyperbolically, but literally everybody's going to get it, who isn't, vaccinated, and maybe even then some, then what we have to worry about kind of as a society is, how do we treat this? It's just like, it's just like the flu. It's like anything else. People are going to get sick. So you have to figure out how to treat it. And, maybe it's just me, but I think there's been a decided lack of conversation around that, except for in, at endpoints of the discussion. So, that's another area that's like super important that just hasn't been talked about.
It's interesting. On the east end of Long Island, there's a small hospital in Greenport, and one of my family friends actually bought a ventilator for the hospital because her mother's 88 and they didn't have one, and wanted to make sure they'd have one in case she had a problem. So when you get into some of these rural areas, Bill, the treatments, we have to make sure that some of the rural areas have what they need to even deal with it in any way. And I was surprised that she went out and just bought one for the hospital, so there would be one there. But I didn't even think of it for my mother. Not as good a kid as hers, but I think it's interesting that treatment angle that you're talking about is how prepared are we for it, and where are we spending?
Yeah, and you can divide that in terms of like critical care, as far as like, what's needed, for people who are really sick, versus, having, if you will, sort of an over-the-counter option,
Yep.
for people. If you do, you can just go down to Walgreens and pick it up, which, by the way, both hydroxychloroquine and ivermectin have been in circulation, for other, treating other conditions for, I think it's like 40 years, something like that. So these are not new drugs by any stretch of the imagination. They just happen to be effective in the COVID situation as well.
Mm.
I can tell you that doctors are writing prescriptions for boosters down here in Houston, although they are testing for antibodies first. So I wouldn't say it's common, but it's far from unheard of right now.